Average Toronto home prices have just dropped by the steepest rate on record, says an article by BlogTO. And if you only read the headline and don't fully understand the context of this article, you may miss out on the biggest opportunity in real estate in over a decade. What's going on, guys? Welcome back to the channel. If you're new here, my name is Demetres Giannitsos with eXp Realty. I'm a real estate agent here in Toronto, help my clients buy, sell, and invest. If you're wondering how articles like this and other statistics that I'm about to go over affect you and your home, feel free to go in the description below where there's a link and you can book a call directly in my calendar and we can have a chat about your specific situation. Okay, with that being said, let's dive into this article because it's starting to get circulated around. And if you know BlogTO, they've got a way of making these scary headlines in order to get clicks. And I love that they just put this out because literally 3 days ago, I sent out my monthly newsletter to over 1,500 people talking about how market sentiment is about to change based on the numbers. So if you guys want to sign up for my monthly newsletter and join the over 1,500 people already signed up, where I go over current market stats and what is going on in the market, and you get it first before I even put it on YouTube, go ahead in the comment section and type in Toronto real estate and I'll send you the link to sign you up. Now, before I get into this article, I want to explain what market sentiment is, okay? Because as much as we would like to think that, you know, all the economic factors and all these numbers are determining where the real estate market will go, unfortunately, it's not that simple. And especially in big cities like Toronto and Vancouver, where the prices are high and investors come with tons of money, a lot of the market is dependent on market sentiment, which is basically the attitude of people who are looking to buy or sell. Do they feel fearful? Do they feel optimistic on the market? And a lot of what drives market sentiment is the conversations that are happening, whether it's a news article, whether it's what your real estate agent is posting on, social media, and just the conversations happening around the market. It's not only important to understand some of the data and the numbers behind what's going on in the market, but it's also important to understand how people feel about the market and how they may feel moving forward based on the numbers that could come out. So if you know BlogTO or other blog articles like this, they really are selling fear. Really, like any news article you ever watch, they know that fear gets more clicks than good news. So they're going to put some sort of a negative spin on an article in order to get you to click on it, much the same way that maybe a lot of you clicked on this video because I literally stole their headline and, tried to create fear within that. But I want to break down this article a little bit further because there is some interesting data behind it. Okay, so let's take a look at this article. The headline is Average Toronto home prices just dropped by the steepest rate on record, okay? And sure enough, the first line says the average home prices have continued to fall on a year-over-year basis, breaking the record 17.9% between February 22 and February 2023. Okay, the key thing to look at here is year-over-year basis. And this article is correct. These articles know how to leverage these numbers to create these scary headlines in a way where they're not lying, but they're, choosing a point in time versus another point in time. So if we break this down a little bit further, looking at the stats here, February 2022, known as the peak of the market. At that point, the Bank of Canada started increasing interest rates and we saw a steep decline up until about July. Now, sure, year over year, if we compare February 22, which is right here at, an average sale price of about 1.35 million to February 2023, where we're at about 1.14, yes, that's a 17% decline. But what they fail to mention in this article, or at least at the very beginning, is that from July to about now, we've actually seen prices increase. So if you just read the headline on this, you would leave feeling, oh my God, the market is going down, now is not a good time, maybe liquidate, whatever the case may be. But you really need to make sure that whenever you see these headlines that you understand that they are selling clicks, they are selling fear, and you want to dive in deeper into the article and what it says. If we continue to read the article, there actually is some positive stuff in here as well. Like it says, many home buyers have also decided to purchase at a lower priced home in order to help offset higher borrowing costs, which actually plays into the newsletter that I sent out a few days ago about market sentiment, because like we said, February 2022 is the peak. And with last month being February 2023, this is the month where these year-over-year statistics are going to be the worst. So they're going to leverage this in an article. But if we just have a little bit of foresight and see into the future on what market sentiment might do or how it might change in the coming months, as we go further into about July, at this point, when they look year over year from July onwards, we are very likely to actually see the market increase in price. So at that point, when these news articles can no longer leverage these scary numbers in order to strike fear, they may actually do the opposite, where they talk about how the market is going up instead of down. And if we know anything about market sentiment, it is that people are actually more likely to buy in fear of missing out than buy on a lower price, scared that it will go further down. So for instance, when we were seeing this really hot market right before February 2022, we were seeing a lot more sales, and a lot more of those sales were driven by people who were scared of missing out on an opportunity and having to pay more for the same house at a later date. Where now, when the market is decreasing or when market sentiment is fearful, people are hesitant to buy into the market because they're worried that it may go down a little bit more before it bounces back up, which is actually the opposite of what you want to do. You want to pick up the asset on its way down rather than on its way up. So like I said, if we have a little bit of foresight here, we know that as of July, market sentiment could very well change as these news articles start to change and as people start talking more positively about the market. So if you are thinking about getting into the market, now may be a good time, as market sentiment is still a little iffy, and you could actually still get in before things get really heated up and before people get really pumped to get back into the market. And to further my point, if you go back to the article and you actually scroll almost all the way to the bottom, which is kind of funny because they know that most people won't actually read the whole thing, it says, and yet experts maintain that the Toronto housing market will shift again this year, bouncing back into warmer territory as competition stokes higher prices. So like I said, if you only read the headline, you left here feeling very negative and how this could affect, your market sentiment, where if you read the whole article and understand the data, you can actually see that there's a pretty big opportunity here. And I think if we take a look at the last 6 months, this really shows you the resilience of the Toronto real estate market and how much upward pressure there is on home prices. Because of course, as soon as the Bank of Canada starts increasing rates, we're going to feel that in the market. But then it hit a point where people are like, hey, I still need to buy a home. I still need somewhere to live. Even with higher interest rates, they've gotten used to that. And you can see that prices are still going up because we are just in a severe supply issue. So if you could imagine that the market could increase with the given interest rates, imagine if in the next year or two, at some point, interest rates start to come down, what could potentially happen to prices. And I want to make it very clear that I am not sitting here trying to predict the real estate market. Nobody can predict what will happen, not these economists, not the people writing, blog TO articles, not your favorite realtor. Nobody knows exactly what will happen. But if you look at some of the statistics and really understand market sentiment, you can kind of make your own assumptions on where you feel comfortable and how you feel about the market moving forward. And like I always say to my clients, as long as you have a long-term plan, real estate has performed very well over time. So as long as you plan on keeping it for a minimum 3 to 5 years, you should find yourself in a pretty good position. For those of you who've been waiting for the perfect time to get into the real estate market, I would seriously consider taking a look at things now, as market sentiment could change in the very soon future. I hope that helps give you guys an idea of what's going on out there and how to dissect these articles a little bit better. If anybody wants to get in touch with me, like I said, I've left a link down in my description below where you can book a one-on-one call with myself. I hope you guys enjoyed the video. Make sure you like, comment, and subscribe, and we'll see you on the next one.